Hello, and welcome to this video on partnership accounts. In this, I'm going to go through the admission of a partner. So Mia and Sophie are in partnership, sharing profits and losses in the ratio 3:2. Their capital account balances at the 1st of January 2026 were Mia £40,000 and Sophie £20,000. On the 1st of January 2026, Leah was admitted as a new partner, and she introduces £20,000 in cash into the business. The new profit sharing ratio is agreed as follows. So Mia is now 50%, Sophie is 30%, and Leo is 20%. And we're told Goodwill partnership is valued at £50,000 at that date. And it's agreed that Goodwill will not be retained in the books of account. Also at that date, in addition, non-current assets are revalued, resulting in a gain of £10,000. Right, so let's see what we've got to do then. Prepare the partner's capital accounts, showing clearly all adjustments after Leo has been admitted to the partnership. Right, so let's have a look at the solution now. If there's been goodwill of the partnership, we need to sort out the goodwill accounts. Now, the goodwill account, we have goodwill created on the debit side and goodwill written off on the credit side. Now, the goodwill created is split between the two original partners, which are Amy and Sophie, and we're told that their profit sharing ratio was the ratio of 3:2. So that was given to us in the question near the beginning. Here we go. Mia and Sophie are in partnership, sharing profit and losses in the ratio of 3:2. Now it's then written off in the new partners or the combined partners now. So it's Amir, Sophie, and Leo, and we're told, as in percentage basis, it's 50% for Amir, 30% for Sophie, and 20% for Leo. And we're told that the amount of goodwill is £50,000. So my debit total is going to be £50,000, and my credit total is going to be £50,000. So for Amir, gets 3 parts, and Sophie gets 2 parts. So in total, then we've got 5 parts. Just make a little note of that, 5 parts. So 5 parts is going to be equal to £50,000. So that means 1 part will equal 50,000 divided by 5, which would then be £10,000. So Mia's got 3 parts, so Mia will get £30,000. Sophie 2 parts will get £20,000. Now, the written off bit then, it's in percentage-wise basis. So Mia's 50%. So 50% of 50,000 is £25,000. 30% is £15,000. And 20% is £10,000. So let's just change that back to £15,000. You want to check, you add those together, and you will get the £50,000. You add those two together, again, you get £50,000. So that's the first thing you need to prepare, is the goodwill account. Now, we also got a revaluation it mentions here. In addition, non-current assets are revalued, resulting in a gain of £10,000. It's going to do a revaluation account now. So, if there's been a gain revaluation account, you'll be debiting your non-current assets, so you'll credit your revaluation account, and the amount of the gain was, let's just check, it was £10,000. So we've got a total for £10,000. And now we've got to allocate that to the original 2 partners. Amy has got 3 parts, Sophie's got 2 parts. So again, you've got 5 parts. Is 10,000. So 1 part will be 10,000 divided by 5, so that would equal 2,000. So Amelia gets 3 parts, so that'll be 6,000. Sophie gets 2 parts, so that'll be 4,000. So now we can go and prepare the partner's capital accounts now. Let's just insert a line there to make it stand out. There we go. So we've got the debit side, we've got Amir, Sophie, and Leo. And on the credit side, again, we've got Amir, Sophie, and Leo. Now we're told in the question the balance is at the start of the year, the 1st of January. So Amir has got £40,000 balance, and Sophie's got £20,000 balance. So let's put those in then. So Amir was 40,000, and Sophie was £20,000. Now the balance brought down. So the balance is brought down. just check that's what it's 40 and 20. And yes, that's what we got there. Okay, so that's your balance brought down now. £40,000 for Amir and £20,000 for Sophie. Now I'm going to deal with the goodwill now. So we have goodwill created on the credit side of partners' capital accounts, because in the goodwill account, it's on the debit side. So for Amir, we're going to allocate the £30,000 goodwill created. And for Sophie, we're going to add the £20,000 for goodwill created. Now on the debit side of the partners' capital account, we've got the goodwill written off, because written off bit is on the credit side of the goodwill account. So for Amir, we've got £25,000. For Sophie, we have got £15,000. And for Leo, we have got £10,000. Now, next we do the revaluation now. So again, revaluation account, we've debited revaluation account with £6,000 for Amir and £4,000 for Sophie. So on the partner's capital accounts, we've got on the credit side. So my next showdown is going to be revaluation account. So for Amir, we've got the allocation of £6,000. And for Sophie, we've got the allocation of £4,000. Now, there's one other thing we can put into our partner's capital accounts. I go right to the top. It's to do with Leo. So let's see what it says about Leo on the 1st of January. Here we go. On the 1st of January, Leo is admitted as a new partner, and he introduces £30,000 cash into the business. So if he introduces it into the business, it's going to be debit the bank account and credit the partner's capital account. So partner's capital account, we've got for Leo, we've got £30,000. And it's gone into the bank account. So now we've entered all of the individual transactions, we can now work out the balance carried down. Now, if you look at Amir's account, on the debit side, it's going to total 25,000, and on the credit side, it's going to total 76,000. So 76,000 is the largest amount. So we want 76,000 on both sides. For Sophie, debit side is 15, and the credit side is 44,000. So again, we want the largest amount on both sides, so it's 44,000. And Leo, debit side is 10,000, and the credit side is 30,000. So again, we want the largest amount on both sides. So the credit amounts are larger than the debit amounts. That means we're going to have a balance carried down on the debit side. So for Amir, it's going to be 76,000, take away 25,000, which is £51,000. For Sophie, it would be a total of 44,000, take away the goodwill written off of £15,000, which is going to give us £29,000. And for Leo, it would be a total of £30,000, take away the goodwill written off of £10,000, which gives us £20,000. Now, so remember, you've got a balance carried down, you must always have a balance brought down. It'll be on the opposite side. So the balance carried down here is on the debit side, so it'll be brought down on the credit side. So for Amir, we're going to have £51,000. For Sophie, we're going to have £29,000. And for Leo, we're going to have £20,000. So that's basically how to do a partner's capital accounts. So first of all, we prepared the goodwill account. We did the goodwill created, then the goodwill written off. Then we went to the revaluation account, and it was a gain or a surplus on non-current assets of £10,000. We then allocated that to the two original partners. Then we put all of the transactions into the partner's capital accounts, worked out the balance carried down, and the balance brought down, and that's then completed our partner's capital accounts. So I hope you enjoyed the video and found it useful. Thank you very much for listening and watching, and I'll speak to you next time. Take care then. Bye-bye.